All right, we're rolling. Welcome, everybody, to another episode of Roots and the City podcast. I'm your host, Jamal the Broker, and today I have a special guest for you all. Welcome to the show, Don Senkus.
Thank you very much. I appreciate it, Jamal the Broker.
Of course, Don. Now, today we're talking about home insurance, so I would love to start the show with you telling the people who you are, what company you're with, and kind of what you do for us.
Yep. So my name is Don Senkus. I'm with the Icon Group. We are a brokerage and an insurance brokerage. Myself, I'm married with 4 kids, 2 dogs and a cat. Grew up in Baltimore, Maryland. Moved to Indiana in 2001. Actually, I moved here and became a real estate agent, believe it or not. After a year, we were having our first child, so I decided to get a more stable job.
Okay.
So for about 10 years, I sold advertising on shopping carts on the baby seats.
Wow, okay.
Those little baby seat ads.
Yeah.
So I did those for about, 10 years. Real estate agents and mortgage companies were our 2 largest clients.
The targets.
Yeah, so made some great connections. And then I've always wanted to get back into real estate industry, but not be a realtor.
Fair enough.
It just seems like a little bit too much for me.
You did use the word stable,
Yeah.
more stable opportunities.
Exactly, yeah. So I did some research to find out, how can I get into the real estate industry without being a realtor? So I was looking at, mortgage and title. Actually came up and became a title agent.
Okay.
Was in title for about 3 years. I sold title insurance. Really, I just made friends with realtors and lenders, and they used our company.
Okay.
I also learned how to do some closings.
Nice.
So, which was fun.
So you've really been in and through the industry in various ways.
Absolutely.
Title, selling the ads. You were a realtor.
Yes. And then I stayed in the industry and switched over to home warranties.
Okay. Yes.
So I was with America's Preferred Home Warranty. Worked with my wife. Shout out to Kendra. How you doing? She actually worked the south part of the state, and I worked the north part of the state.
Okay.
So, which was kind of nice.
Full coverage.
Full coverage, exactly. We had a little team going on.
Yes.
It was actually fun because we would have trainings. Some of our clients overlapped a bit, so we were able to have some trainings and work together, which was nice.
Very cool.
And then an opportunity came up for homeowners insurance. So I decided to jump on board. It was a great idea. There are 2 different types of insurances. There's broker and captive. So a captive agent is more of a State Farm.
Okay.
They only sell State Farm products.
They're locked in with State Farm.
Exactly, yeah. So I'm a broker. I work with various carriers. I think we're up to like 10 or 12 now.
Okay.
Which is nice. So I don't work for any specific carrier. I actually work for the client.
You get to shop around more than, say, the State Farm would, where
Exactly.
they have to stay within that State Farm family.
Absolutely, yes.
Okay.
Yeah. So I have more of a chance of finding something for someone.
Very cool. Well, you are with the Icon Group.
I am.
And they've been doing great things for our office. What are some kind of standout things about the Icon Group that you bring with the insurance piece to not just real estate, but you really can do it all?
Yeah, we pretty much sell anything except for health insurance.
Okay.
So we do home, auto, life, business, commercial. I focus more on home, auto, and life. For now, just home and auto mainly. One thing that, again, that we stand out is because we are, a broker. We're able to really shop around to where we can help find our clients the best premium, the best coverage. And there are times where I'll have clients reach out to me and we can't find them something.
Yeah.
But there are, which is kind of rare, but there are also times where someone may want to just shop around and see if they can find better coverage, and they have a great policy. And I'll let them know, hey, you know what? I would love to have your business for sure, but you have a great policy, you have great coverage. Stick with what you have. And if for some reason things change, I'm always here.
Yeah, and listeners, that's very true. I'm always going to put my guest on the spot that way, and we speak from experience. My clients, Stephanie and Brandon,
Yep.
we had that experience. I said, "Hey, meet my friend Don," and Don came back and said, "Hey, I'd love to help you, but you should probably just stay where you are." And
Yeah.
that's very respectful from a business standpoint too, because what I like about the Icon Group is that you all are always there, and you're always going to see what you can do and if you can help before politely saying, "Hey, I'd love to, but we can't." But that's just good business, right?
I really agree with that. I think when you start chasing the dollar bill, that's when maybe you want to cut corners.
Yes.
And do things where, to me, it's like, if I'm going to do right by the customer, which I'm going to always do that, the money's going to come.
That's right. And I operate the same way. I totally agree. Now, you mentioned a couple of things, like the various types of insurance. And listeners, I asked that question specifically because we're about to get into the meat of it all. So we're going to come back to that and the idea of bundling and kind of the trends we're seeing with that. But what is home insurance? Why is that important?
Absolutely. So homeowners insurance, it's a type of property insurance that's going to cover your largest asset, which is your home, obviously. If something happens to your home, it could cover things, for instance, a lot of times people look at like when I first got into insurance, I didn't know what I was looking at. Like, what is dwelling coverage? What is personal property? What does all this stuff cover? I always looked at, how much do I pay?
Same.
I never really looked at how much coverage I have, or even what type of coverage that I have.
Right.
So, dwelling coverage, it repairs or rebuilds your home in case something happens. Like if a twister comes and takes out your home, or hail damages it, or it's gonna cover if you need to rebuild your entire home.
Gotcha.
So that's your dwelling coverage. Personal property, I always say, your furniture, your electronics and clothing. I always say, take your house, dump it upside down. Whatever comes out, that's your personal property. That's
I'm stealing that.
That's a good way of thinking it. You have, liability protection, which liability protection is if someone is injured on your property.
Yeah.
Which obviously you have to have that. That's huge.
I'm definitely thinking about that one. I need to put some runners on my stairs. I've got some slippery stairs.
Yes,
I don't want anyone taking a tumble.
It's the worst. Oh my goodness! I have a story about falling down the steps later on. I'll tell you. Additional living expenses is one other thing that's covered. I didn't even know this, but we actually had about 2 years ago, we had a big leak and our kitchen floor was just ruined. So we couldn't cook in our kitchen. We couldn't do this stuff. So that would cover that stuff. If you can't live in your house, it'll cover expenses for get like a hotel room or lodging or something like that. And then your food, things like that. So if you're put out of your house in any way, whether it's cooking or just not living there, that's what the additional living expenses would usually cover. It usually doesn't cover things like flood insurance, earthquake. There's actually special additions you can add to your coverages to get those things, but it doesn't cover it with just the standard. Those are extras you have to add onto it.
Like an a la carte kind of situation.
Absolutely,
Here's your base coverage, and then if you want, you can add on those extras.
Absolutely.
So speaking of the additional living costs, I'm thinking back to when I lived in my old condo in Eagle Creek, and I had to replace my floors twice in 9 months. There was water.
Oh my goodness.
First time the dishwasher was leaking, we had no idea. And we're on a slab, so everything came into our living room. No. And then the second time, one of the water mains burst in the community, but our property was impacted. So 9 months later, bamboo floors, water was back under there.
No.
So now I'm thinking about the additional living costs because to your point, what you just shared with us, we were not able to use our kitchen.
Okay.
Like we had no dishwasher, all the floors were ripped out. The whole kitchen was gutted. Wow. So all of our Wingstop, we were low carbers, all of our chicken wings and all of our paper plates and things, that was part of the claim because we couldn't cook in the kitchen. We couldn't do dishes. So we were eating out a lot.
And they covered you, right?
And they covered us.
Isn't that nice?
Let's
go to... like Ruth's Chris, right?
Right. Maybe not every day during the month period, but that additional living cost, things you might not be thinking about when you're thinking about insurance.
Absolutely.
Okay.
Yeah, those are huge. Another thing, there are obviously certain things that I add on every single time. personal injury is one. So this is, I always put minimum $500,000 coverage. That is in case with social media, I feel like it's so easy for someone to take, offense on things. So slander, false, invasion of privacy.
Right. There's so much
just
now.
things that people could get offended on and come back and sue you. And I always just put that on there, just an additional. It's like I said, it's $500,000. It's not that more. It doesn't cost that much more to add to your policy.
Okay.
But just to cover yourself.
Okay. When you're talking about when clients come to you and you're kind of working through those numbers, you've got your coverage amount versus what they're actually paying. What does that discussion look like as far as this is the monthly payment for this type of coverage?
Yeah, whenever I go through, first of all, when I first talk with someone, I always want to. I don't want to just assume this is what they need and this is what they have. I like to have a conversation with them to find out, what they have and where they're living and all that good stuff. And then once I come up with the quote, I'd like to go through the entire thing.
Cool.
Because, again, I don't want to just give them price, and I want them to know exactly what. And legally, I'm supposed to let them know what's being covered. So I'll go through all the coverages, and sometimes we can adjust things. I just had someone recently, they wanted to add their jewelry to there, and then they saw what the price was. It was only like an additional $50.
Okay.
But she felt that it wasn't. She's like, I can replace it on my own. So we took that off. So we can always adjust it. Obviously, every single policy is going to be customized.
It's really case by case and what the person thinks they need.
Exactly.
And they can they add those kind of a la carte options anytime, or do they have to wait a year?
It depends. Okay. Most of the things, for instance, like water backup coverage, or one thing that I always add, if a home is older than 20 years old, 25 years old, I usually add buried lines. So the sewer coverages and your sewer lines that go from your house to the road, because roots like to go in there a lot as they get older.
Yeah.
And then you had a story about that, didn't you?
Yeah. Episode 4, listen about the sewer line, listeners. I thought that willow tree was big and gorgeous and beautiful, and we put in the offer and won, and did not do the sewer scope, and 5 days later we were buying a sewer line.
Oh my goodness.
And that root ball, when I tell you it looked like a live anaconda in my front yard, it's insane.
Wow, so something like that you can't add mid-policy. It's because there could be times where they didn't think they needed it, and then during the policy they figured, oh, hey, you know what, let's do a scope, and they looked at it and realized they have roots in there, and let's add on to this. Well, you can add it afterwards.
After it's fixed, yep.
Exactly. Or even not after your year's up.
Okay, that coverage period.
Yeah, the coverage period, yeah.
Okay. Something in real estate we hear all the time. We talk about home warranties, you mentioned it. What is the difference between a home warranty and home insurance?
That's a good question. So insurance covers damages caused by events. Okay. So you have hail damage. It's more like reactive. It does not cover wear and tear. Okay. Where your home warranty covers the wear and tear and the mechanicals, the AC unit, the furnace, things like that. So I always look at it like this: with a home, if your hot water heater breaks and floods and ruins your basement, and the carpet and everything, the home warranty will cover the insurance could cover it as well, but the home warranty will cover the water heater, and the homeowner's insurance will cover any structural damage to it. So the carpet, furniture, anything else that needs to be replaced.
Gotcha. See, that's something that comes up all the time with clients, and I'm never quite sure if I'm answering it properly.
Yeah, well,
it sounds like I have been.
There is a very thin line, because if you do have a flood, maybe a backup. Well, since it was caused by your hot water heater, it's not going to cover your water heater because it's not. Because if it was like a sewer backup and your water heater was ruined,
part of that damage,
then it would do that. But since that was the coverage, that's the cause of that damage, that's not going to be covered by the insurance, where everything else structurally will be.
Oh, that's a helpful little tidbit, because when things happen, especially with houses, first you're like, who do I call?
Right. They call you, right?
Yeah.
They call your agent.
Yeah. So that's helpful for all of us involved. Now, one of the kind of hot topics that have been surging conversation-wise has been on roof coverage. And obviously, listeners, every part of your house is important, but the roof, the foundation, the windows, electrical, all of your systems, those are those bigger items where the price tag can go crazy very quickly and add up. The dollars add up very fast if you're not careful and depending on the scenario. And there's been a lot of talk about people maybe being dropped, their roofs, I should say, being dropped from coverage. So I just wanted to talk a little bit about that. What have you heard about the roof coverage?
Yeah, roof and water claims are the two biggest ones that big part of why premiums are going up.
Okay.
And why people are being turned down for things like that. The shift does have a combo of all of this crazy weather that's been going on. Rising construction costs, things like that. A lot of people are also where we are. They're thinking, we don't live in California where all those fires are. We don't live in the Florida or the Carolinas where all the storms are. But numbers that I actually have in my notes here in 2023. In the United States, there were 28 natural disasters that totaled over $1 billion each.
Wow. Each.
Out of those, so out of those 28, 11 were in the Midwest.
Whew.
So that's why a lot. In 2024, there were 24 that totaled over $1 billion in damage.
Wow.
Now, there were a lot that equal to hundreds of millions of dollars.
Sure.
But these are over $1 billion. So in the Midwest last year, out of the 27, there were 12.
Goodness. So
that tells you this is why a lot of the premiums are going up. We're seeing
Especially
40%
here.
people's rates going up 40%.
Wow.
Easy. I just had someone that, and also, a lot of the companies, most of them have 60 days after closing to really agree. So there's a small chance where they may take the coverage away and say, we can't cover you now.
Oh, wow.
I'm dealing with someone now who, I'm not going to tell you the name of the carrier, but their initials are and they so within the first month they went out and did a quick inspection, and usually it's just an outside inspection, and they noticed a big patch on the roof, and they decided not to cover them. They said, we're going to basically take the coverage away from you because they were within that 60-day period.
Whoa.
So now I'm shopping a new rate for this person, or a new coverage carrier for this person, which is crazy to me because I was looking at Zillow and there's a picture, you see a patch on there, but I looked at the home the inspection, and the home inspection looks good. I mean, there's no leaks or anything like that, but I don't know, the person came out, took a picture and decided not to cover them, so I'm shopping it now.
That's so I'm just processing this like I have with customers and clients. This is all running through my head. So they saw the spot and they were like, we're not touching that. Is there more investigation involved before they just decide? Does it depend on the company? Probably.
I think it depends on the company.
Okay.
He just gave me a call and said, we had insurance and now we're going to be canceled. I think it's within like the next month or so.
Wow.
Because they closed the end of April.
I mean, this is a conversation that's happening with a lot of people right now, listeners. I was hanging out in my backyard this weekend, and clients of mine walked by, and they're purchasing a house with a roof that's definitely older than 12 years old. And so far, things seem to be fine, but it has been kind of a little hike to find someone to cover them. In your experience and just kind of what you know about insurance historically, I should say, have companies always been able to kind of pick and choose what they cover and why or why not?
Yeah, I mean...
Is it a guideline change in the industry or...
Well, I mean, pick and choose... I think a lot of it just happens to be the age of things. I mean, a brand new home, a new build, they would love that because it's not nothing going to happen to it. Most companies do have a standard coverage, and as far as add-ons. So what they may be able to do, I have noticed, on older homes, for instance, I always add water backup, personal injury. Any home over 20 years old, I do the buried sewer lines. For the water backup portion of it, a newer home, I could cover up to probably $40,000 if there's any damages for the sewer backup that comes in. And it ruins basements and carpet and all that stuff. Homes that are usually older than probably 50 years old, they're only going to max out at maybe $5,000 or $10,000. And that depends on the carrier that they're going to cover on that. So that's how they would adjust it. I'm pretty sure they are pretty much the same standard. But when it comes to the ages of things, I mean, that's where they really start changing it more.
Okay, so it's more really the age. So, like any other industry, it's a trend that they're noticing. And hey, there's more roofs that are over 10 years old. These cost this much to cover. So maybe it's not the best business move for them.
Right.
And in my research, I've seen reasons you could be dropped, air quotes dropped, from coverage is not maintaining the property well.
Absolutely.
So
Yeah.
if you are not being a good homeowner and, getting those annual checks or doing your due diligence that way, you could actually, for lack of a better phrase, shoot yourself in the big toe.
Yeah.
Like, hey, you've done a horrible job taking care of your roof. When you bought the house, it was in great shape. What happened? Now we're not covering you.
Absolutely. I mean, it's all about risks, right? Because if you think about it, I mean, they're paying out, you're paying X amount of dollars every single year, $2,000 a year.
Yeah.
And they have to replace your roof, which costs $20,000.
Yes.
So the balance just isn't there. It doesn't, so that's why they're getting more strict, I think, on things. And if someone is being very destructive to their property, or just not really maintaining them as much.
And we see those people.
Yeah.
They just don't care somehow.
Yeah. we were at the race this past weekend, which was fun actually. And we were walking, and I've seen this before. There was somebody on their roof. There was a big branch just sitting up on their roof. I was like, what are they doing? Take it off. Like, I felt like jumping up there and helping
I
them
have
just
the
kick it
same
off or
reactions.
something.
Like, what are you doing?
Yeah.
I was at a client's this weekend cutting limbs back. I offered to do that just because I had the tool at my house, and she's one of my lovely senior clients. But whenever I live in Broad Ripple, so whenever I see these poor detached garages just covered in limbs, I'm like, hey, do you need a hand with that?
Can I help you, please?
Okay, so listeners, what I'm hearing from this conversation so far is read the fine print, because legally, if you're not meeting the criteria, they could take away that coverage, and you signed off on that.
Yeah, I mean, typically
risk.
it's not. Yeah, I mean, unless they know about it, and most of the insurance companies are going to come out and look like monthly to see how things are going. But if they notice during that time period, like that year that you have coverage, you have a lot of claims, there's a chance that when it's time to renew, they may not renew you.
I did see that too. Okay, so if you're making too many claims, they might cut you off.
Even some of the claims, I mean, I have someone, they were going to do a roof claim, and they decided to pay zero on it. They not zero, but they decided to pull it back. So I looked on the claim, on the CLUE report, CLUE report, and it said zero paid out, and it was closed. But one of the carriers, even though that was the only claim on their record, car and their home, they're not allowed to try to get coverage with that specific company for 36 months, even though it was just a claim. Even small claims like your towing, if like roadside assistance. I sometimes try to talk people out of it. It's like, get like AAA or something, because any of those claims, exactly, even though it's a claim, and maybe it's paid zero or it's $100, it's a claim. And now, because of all the craziness with what's going on, the carriers are thinking, oh, here's a bad mark on your claim history.
Jeez, okay.
So we're going to either turn you down, or we're going to make your premium higher, because you had a claim, you're more of a risk.
So they're just hypersensitive to the environment right now.
Yes, definitely.
Okay, so how old is too old when it comes to roof coverage?
Yeah. So this one is actually in Louisville, Kentucky, and this is the one with the patch roof.
Okay, with that random patch.
Yeah. So he said it was 11 years old, and for some reason, they did not cover it. I don't know why, but it just said, when I was doing the quote, it said, this home is not eligible. Reasoning, the roof is 11 years old, or it's over. It was over 10 years old.
Huh.
I thought, what? I have some that I just covered a roof that was 23 years old. But they're just so picky. So kind of
really
give
depends.
Another example. Someone who has a 17-year-old roof, I was not able to get them coverage, but I was able to get someone coverage who has a 23-year-old roof.
Okay.
Now here's the reason why. The 17-year-old roof, they were doing homeowners only.
Okay.
Okay. He had a good auto policy. He had some blemishes on his auto, so he was locked in for like another 7 months. When I ran those quotes, they were a lot higher because of the blemishes that are on the auto. So they were doing homeowners only, and that knocks us down from our 12 carriers to probably 3.
Okay.
So of those, because the roof was 15 years old, was 17 years old, which is older than 15 years old, then they were unable to cover them. So I had to turn them down.
Wow.
But someone who had a 23-year-old roof who added their auto along with their home, they were able to cover it. Now, it was on a payment schedule, and we can chat about that if you want.
Yeah, and see, that's why earlier I kind of alluded to the idea of bundling, because when you're thinking about roofs, and this is discussions we're having now with buyers, if you've got a 5-year-old roof, my roof, I got lucky with our claim. One day I woke up one morning and water was pouring in from all around the window. Oh, man. There was a leak in the roof, and luckily, running the various reports, there were at least 3 hailstorms.
Okay. So it was a catastrophic event.
Yep. So we paid our deductible. That was good. But there are people who are not so lucky. If you have a 10-year-old roof, a 15, a 20-year-old roof, what does having insurance work for you look like? And a lot of the people are bundling. A lot of the companies are bundling so you can cover that older roof, right?
Yeah, and you would think that, there are a lot of companies who will just run auto, but only a few that'll just run homeowners. You would think you're in your car all the time. There's more of a chance you're going to get into an accident. But they feel like it's a better risk to take than paying out a huge homeowners claim,
Yeah.
So it does make more sense to bundle, because again, it switches from having 3 carriers now up to 12 carriers, 12 different quotes that I can come up with.
Okay. It gives you a little more options if you bundle.
Absolutely.
So it's a safer move to make if you want that full coverage.
Absolutely. Yeah. It's a multi-policy discount you can get. There's a lot of different discounts that you can get. So, even though they are raising premiums, they're just protecting themselves as well. But there are really good chances or ways that you can get discounts, whether it's bundling or if you're a part of AARP, things like that they try to give people, if you quote it within further out of like a 2-week period, within like a 2-week period, you could probably get a discount on certain carriers.
Okay. Listeners, let's take a quick little break and we will be right back. Hey, are you feeling okay? Not you, your house. With changing interest rates, inflation, and an unbelievable real estate market, do you really understand your home's current value? Just like an annual physical, a real estate review is important to your financial health. You might think about cashing out for a remodel, refinancing for better terms, or you may even see a great profit by selling. Or maybe you're just curious. Schedule your real estate checkup today. Give me a call at 812-202-1302 to learn the true value of your real estate in this exciting market. It's free and there's no obligation. If you're also interested in a real estate review meeting, we can do one of those too. Zoom or in person, you have the number 812-202-1302. Give me a call today. Okay, let's get back to the show. All right, welcome back from the break. We're talking about home insurance today with Dawn of the Icon Group. And we were just talking about kind of bundling and what coverage looks like. Some ways you can make sure that older roof is covered. So bundling, would you say shopping around and just asking those questions? How can a person ensure that their older roof will be covered?
Absolutely. So there are 2 ways that they will cover a roof. One way is a full replacement cost.
Okay.
Typically within a roof the age of 0 to 10, maybe even 12 years, they will do a full replacement cost. What that means is if your roof is damaged and you need a brand new roof, your deductible is the only thing that you'll pay. They will pay for materials and labor, and everything's done. You have a brand new roof.
Nice.
Anything past that, you're going to get into what they call a payment schedule. What a payment schedule is they will still pay all of the labor, but they will split the cost of the materials with the homeowner.
Okay.
So, for instance, My roof is 20 years old. I know that's bad, but my roof is 20 years old.
It's hanging in there.
Exactly. It's hanging in there. So what they'll do is they will pay 40% of the materials. I pay for 60% of the materials and my deductible.
Okay.
And the homeowner's insurance or the carrier will pay for 40% of the materials and the labor cost. So for instance, if if the materials cost $10,000, typically the labor is going to be the same amount. So they'll pay the $10,000 in labor.
Okay.
I will pay
you telling me that before.
$6,000 plus my deductible, and they'll pay $4,000.
Okay. Okay, so payment schedule, listeners, new vocabulary word for us.
There you go.
I'm going to repeat this back to make sure I understand. So you've got your full replacement coverage, and then after that, depending on the age of the roof, they're going to cover a percentage of the materials with you, and they will cover the labor. But they're going to split that material cost with you. And 40%, that's just an example of probably...
Of my 20-year-old roof. Typically, they'll go... The least they'll pay would be usually around 25%.
Okay.
That's what I've noticed in a lot of the payment schedules.
So 25 to 40% potentially.
Yeah.
And we're digging into this conversation too, listeners, because when we write an offer on a house... home insurance is part of the documents that we are submitting. We're guaranteeing that we will lock in coverage by a certain amount of days, whether it's 20 or 30. And if we can't find coverage, we might be pushing that closing back. We will make the closing happen, but it might be delayed, right? So those are things that we're definitely talking about in my personal market, because I work with a lot of houses that are over 100 years old.
Yeah.
So I will tap you on your shoulder and say, hey, can we run a clue report? And that doesn't tell us all the secrets, but I'm looking for, has any work been done? What are those claims look like? Were anything done with the claims? Why were those claims removed?
Yeah.
Insurance is it's a wild world when you apply it to real estate, and like anything else, it's morphing in how it's servicing our people. The bundling thing is huge, because as I sit here and think about real estate as an industry, it's been around for over a century.
At least.
So
I should know that, but yeah, at least.
At least over 100 years. So thinking about things like roof coverage, I'm like, man, what have people done before? Like, what does that landscape look like?
Yeah, there are times where, we can't get coverage or they can't get coverage somewhere else. They're going to have to get some kind of what they call like a surplus coverage.
Okay.
The premium is going to be really, really high. We just had one of our coworkers here had active knob and tube.
Oh,
and
yes.
His buyer at first we said, we can't cover you guys. So they went back to the seller and actually used it as leverage, which is a good idea, to say, hey, whether it's us or someone else,
yeah, it's true.
No one's going to be able to get coverage here. So we could have probably gotten coverage for them, but it would have been very high premiums.
Very high.
Yeah. So they're going to I don't know what they're going to do. I think they're going to fix it, which they should, because anyone else that's going to try to buy it is going to need it fixed anyway.
And that's one of those things in real estate. That's part of the risk, right? When you're owning something, you're signing up to take care of it, and you work with your realtor to go through that inspection report. And you're absolutely right. If it's not us, someone else is going to have to deal with it. Electrical and sewer lines, very triggering for me on the insurance front. So that was going to be a question of mine for you. What happens if they can't be covered? So there are other entities where they just might need to pay a little more.
Yeah, we have a couple third parties that we work with. We can get a quote for them. Okay. Again, it's going to be higher premiums, but that's a higher risk that company has to take.
Okay.
For that to happen.
As we wrap up with you today, Don, what are some ways that you would advise people to insure, like if they have insurance now, they're wondering, has my detached garage been dropped off because that roof needs to be covered too? My roof is old. What position am I in? How can they ensure their coverage is locked in?
Typically if you're within that year, it's going to be locked in.
Okay.
Within probably, I think it's around 60 days is when the insurance carriers usually send out a notice before you have to renew for any changes. Whether it's, hey, we just switched from your roof from full replacement cost down to payment schedule because of the age. It can't hurt to talk to your insurance agent. there's a big chunk of people that I've talked to that are underinsured.
Mm-hmm.
When I redid my own, I was actually underinsured by about $100,000.
Oh, wow.
You know, with all of the labor costs going up, and we actually get 25% of our lumber from Canada.
Right.
So that's an additional thing that I always add on to it as well. Some of the carriers will have guaranteed replacement cost.
Okay.
So if it costs $500,000 to replace your house, and with all of the inflation and tariffs and everything, now it's going to cost $600,000. With the guaranteed replacement cost, they're not going to pay a penny out of their pocket.
Okay.
There's some that may go over 25%, or may 50%. You can have the option of that. I usually put at least 25% of protection, over that. So
Beautiful.
If something, God forbid, something does happen, that $0 is going to come out of our client's pocket.
That's definitely that's a great call out. Are you covered to your capacity where you need to be? Because if you're underinsured, you think, okay, great, we've got this in place, but then you run out of those coverage coins.
Yeah,
then,
right, exactly.
Then what do you do?
We try to do this as well every year. If we know that the customer is going to get, their premiums are going to go up, we will reshop it for them.
Okay.
Just to make sure that they are. But it can't hurt to just talk to your insurance agent, your current insurer. Call me. That's fine too.
Yes, called on.
And just to say, hey, can we rerun it to make sure that I'm covered? Okay. There's it's called the replacement cost estimator, I believe is what it's called,
okay.
RCE. Have them run that just to make sure that your coverage A, which is your dwelling coverage, is where it's supposed to be.
Very good.
Because I guarantee most people
are underinsured.
Are probably underinsured a little bit, yeah.
And it's one of those things too, like now as an agent, I'm way more responsible with my property.
Right.
Check on your things. Like these are things that you should know and you should be aware of. It's probably helpful to, like Don said, check in with your agent. Hey, what's going on? It's like if you call me about real estate, I can talk about the market. I'm sure it works the same way for insurance agents and brokers.
Yeah, and if people are redoing their home, we just redid our kitchen. So now we went from a builder's grade countertop to quartz.
Oh,
if there's a big fire and that gets ruined, it's not going to replace that.
That piece.
We went from carpet to hardwood floors, things like that.
All those elements.
Exactly. Yeah.
Very cool. Well, Don, I appreciate all of your expertise and knowledge. I hear a lot of people right now talking about insurance coverage and what that means, and not really having discussions where clients and customers can truly understand the what's and the whys. So thank you for your time and expertise today. Do you want to tell us where we can find you? Any social media pages, websites?
Still working on my social media stuff, and I'm going to hope that you may help me out with that because you are a genius at that. But you can give me a call. Is it okay if I leave my number? Okay, 317-315-6900. Or you can email me at don@theicongrp.com.
Yes, please reach out to Don, a wealth of knowledge and a great resource for myself and my office. We will make sure all of his contact info is in the show notes. And when you get that social media set up, we'll update that for you too.
Thank you. Appreciate that.
All right, listeners, it's been another episode with Jamal the Broker and Roots and the City. Have a beautiful week. Bye. Thank you for tuning in to another episode of Roots and the City podcast. Please remember to rate and review wherever you listen to the show and also share it with a friend. Remember, you can contact me at hello@jamalthebroker.com if you are looking to buy or sell a home in Indianapolis or even outside of Indianapolis. You can find me at Jamal the Broker on Twitter and Instagram and at Call Jamal the Broker on Facebook. Find more contact information in the show notes, and please don't hesitate to reach out if you need me for anything at all. There's no such thing as a stupid or dumb question, so please do not hesitate. All right, I appreciate you. Talk soon.